What's up, crypto family? Welcome back to Goldrush Crypto Daily, your daily dose of crypto news, analysis, and market insights. We cut through the noise so you can stay focused on what really matters. And today, we've got a monster episode lined up all about Kaspa, one of the fastest rising names in the entire crypto space. We're going to break down why Kaspa today looks a lot like Bitcoin did back in 2012-2016, the golden years before parabolic growth. The technical setup showing a potential breakout right around the corner. A major new exchange listing that strengthens liquidity and adoption. Whales quietly stacking millions of KAS while retail sleeps. Kaspa entering the stablecoin arena with a USDC pair, a move that could bring in institutions. And finally, a bold forecast that Kaspa's scarcity could actually surpass Bitcoin itself by 2030. That's right, faster than Bitcoin, harder than Bitcoin, and potentially more scalable than anything we've seen before. If you're even slightly bullish on crypto's future, this is one episode you don't want to miss. But before we dive in, do me a favor, smash that like button, subscribe if you're new here, and hit the bell so you never miss our daily updates. Every interaction helps push this content out to more of the crypto family, and trust me, you'll want to be here every day as we cover these market-shaping stories. All right, let's jump right in. Let's start with the big, bold claim making rounds on X. Kaspa today looks just like Bitcoin between 2012 and 2016. Now, for those newer to the space, let me put that into perspective. Back then, Bitcoin was trading for just a few dollars to a couple $100. It was mostly ignored by mainstream media, ridiculed by traditional finance, and only beginning to form a real community. Yet under the surface, the fundamentals were quietly strengthening. Hash rate was climbing, adoption was creeping forward, and early believers were stacking sats while everyone else laughed it off. Fast forward a few years and that funny internet money went from obscurity to a multi-thousand-dollar asset, setting the stage for the institutional wave we see today. Now, why compare Kaspa to that era? According to @KaspaBoix, the charts tell the story. Both show a parallel accumulation structure in their first few years, both launched with strong momentum that later consolidated into a base. Both carried an underlying parabolic potential that only a handful recognized early. But here's where it gets exciting. Kaspa isn't just repeating Bitcoin's early cycle, it's upgrading it. Instead of 10-minute block times like Bitcoin, Kaspa runs on a block DAG architecture that can process blocks every second. That makes it 600x faster without abandoning proof-of-work security. Think about that. Bitcoin proved POW works. Kaspa is proving it can scale without sacrificing decentralization or speed. These early comparison analogies can sometimes feel overhyped, but in this case, they're actually useful. Because if Kaspa really is in its 2012 Bitcoin moment, then the upside potential is staggering. Back then, most ignored Bitcoin because it seemed too new, too unproven. The same could be said about Kaspa right now. The question is, do you want to be the person who ignored the signs again? Now, long-term visions are great, but traders want to know what's happening right now. Well, Kaspa's chart is heating up. Over the past few weeks, price action has been choppy. Up 20%, down 11%, another drop of 8%. On the surface, it looks like noise, but zoom out, and you'll notice something important. A symmetrical triangle is forming. For anyone not familiar, a symmetrical triangle is a technical pattern where the highs are trending lower, the lows are trending higher, and price gets squeezed tighter and tighter. These formations usually end with a decisive breakout in one direction. And here's the kicker. Breakouts tend to happen in the final third of the triangle, which is exactly where Kaspa is right now. Even more bullish, the weekly MACD shows bearish momentum fading. If that flips into a bullish cross, it could be the spark that ignites the move. The key level, $0.1315. That's the breakout point traders are watching. Clear that level, and it signals a trend reversal with potential to retest and even surpass all-time highs. These setups don't come around often, and while no chart pattern is a guarantee, the odds here look favorable, especially when you consider the fundamentals we'll talk about next. When technicals line up with adoption news and whale activity, it usually means something big is brewing. Speaking of adoption, Kaspa just got listed on WhiteBIT, one of Europe's largest centralized exchanges. Now, WhiteBIT might not be a household name like Binance or Coinbase, but it's a big player in Eastern Europe and parts of Asia with millions of active users. For Kaspa, this means a new on-ramp for retail traders to get exposure. Why is this important? Because liquidity is everything in crypto. Without it, price discovery is clunky, spreads are wide, and institutional players hesitate. But every new exchange listing adds depth to the order books, reduces friction for traders, and signals growing recognition. It's the same playbook we've seen with countless successful assets. Start with smaller exchanges, move to mid-sized platforms, and eventually land on Tier 1 listings. WhiteBIT is another stepping stone. It's a signal that Kaspa is gaining legitimacy, and it puts pressure on bigger exchanges to start paying attention. If this pattern continues, it's not a matter of if Kaspa gets a Binance or Coinbase listing, but when. And when that happens, buckle up. While retail celebrates exchange listings, the smart money has been making moves quietly. According to Daily Kaspa, Wallet 7 just scooped up another 2 million KAS from Kraken. That's on top of an already massive position. This is classic whale behavior. While smaller traders panic on red days, whales are patient accumulators. They're not looking at the daily candles. They're looking years ahead. And here's why that matters. When whales load up, they're effectively removing supply from circulation. The less KAS available on exchanges, the more violent the eventual price surge can be when demand spikes. It's the same dynamic that fueled Bitcoin's supply shocks in past cycles. Following whales doesn't mean blindly copying them, but it does mean paying attention to what the smartest players in the market are doing. And right now, those players are saying one thing loud and clear: Kaspa is worth stacking. Here's where things get really interesting. Kaspa now has a KAS/USDC trading pair. At first glance, that might sound like just another trading option, but it's way more than that. USDC is one of the largest, most trusted stablecoins in the world, with billions in circulation and strong ties to institutional finance. By pairing with USDC, Kaspa is essentially stepping into the institutional arena. Why? Because stablecoins aren't just trading tools. They're the backbone of DeFi, cross-border payments, and settlement networks. And here's where Kaspa shines. Its block DAG design makes it incredibly fast and scalable. That means it can serve as the rails for stablecoins, offering near-instant settlement without compromising security. My take: this is a huge unlock for Kaspa's future. It's no longer just about being a fast POW coin. With USDC pairs live, Kaspa positions itself as infrastructure, the invisible backbone for stablecoin settlement. And infrastructure projects, those are the ones that quietly eat the world. And now let's wrap up with perhaps the boldest prediction yet. According to Crescendo Capital, Kaspa's stock-to-flow ratio will surpass gold and silver by 2028, and even surpass Bitcoin itself by 2030. Let's unpack that. Stock-to-flow, or S2F, measures scarcity by comparing the existing supply of an asset to its annual issuance. The higher the ratio, the scarcer the asset. Gold has a high S2F because new supply from mining is small compared to the total stock. Bitcoin's halving cycles push its S2F higher every 4 years, which is one reason analysts use it to model price growth. Kaspa, however, has an aggressive emission curve. Its block rewards decline rapidly, which means its supply schedule accelerates towards scarcity much faster than Bitcoin's. If these models hold true, Kaspa will be scarcer than gold by 2028 and scarcer than Bitcoin by 2030. My take: if Kaspa really becomes both faster than Bitcoin and harder than Bitcoin, it forces the market to rethink everything. Bitcoin has always been seen as the hardest asset in existence, digital gold. But what happens if a faster, more scalable POW coin becomes even scarcer? That's a narrative Wall Street won't be able to ignore. All right, crypto family, let's recap today's massive Kaspa updates. Analysts are comparing Kaspa right now to Bitcoin in 2012-2016. The early accumulation phase before parabolic growth. The charts show a symmetrical triangle pattern pointing to a breakout at $0.1315. Kaspa's liquidity expanded with a new WhiteBIT listing. Whales are quietly stacking millions of KS while the market chops sideways. Kaspa entered the stablecoin arena with a USDC pair, giving it institutional relevance. And finally, projections show Kaspa's scarcity could surpass Bitcoin itself by 2030. The big picture? Kaspa isn't just another altcoin pump. It's building for the long game, combining speed, security, adoption, and scarcity into one package. Now I want to hear from you. Do you think Kaspa has what it takes to flip the narrative and even surpass Bitcoin in the next decade? Or is this just another overhyped comparison? Drop your thoughts below. I read every single comment. If you found today's breakdown valuable, don't forget to smash that like button, subscribe to Goldrush Crypto Daily, and hit that notification bell so you never miss an update. This is not financial advice. Always do your own research. But one thing's for sure, the future belongs to those who stay early, stay patient, and stay bullish. I'm Goldrush. This is Crypto Daily, and I'll catch you in tomorrow's episode.